Okay, so let's get started. So if you can hear me, kindly send an emoji. Just type something on your chat. Send something to me on your chat. Let me see if you can hear me, please. Okay, so I'm going to allow us to unmute ourselves a bit. So you can just, okay, so kindly unmute yourself and signify if you can hear me so we can get started.
Yes, I can hear you, sir.
Okay, that's great.
With that.
Okay. How about Adeyemi Bello? Can you hear me?
Yes, I just spoke now. I can hear you.
Okay, no problem. Okay, so I'm muting us all again. Okay, so we are starting right now. Okay, good afternoon, everybody. My name is Michael Oluwasegun. I'm going to be your tutor for today. And today we are going to talk about understanding the analysis in the global financial market, which is also going to be called Introduction to Analysis. So it could be technical, it could be fundamental, it could be sentimental. So today we are going to discuss explicitly, one after the other, on the types of analysis that we have. Okay, so prior to that, let's get started. Okay, so what are the types of market analysis that we have? We have three types of market analysis. We have the fundamental analysis, we have the technical analysis, we also have the what? The sentimental analysis. So what does analysis mean? Analysis analysis is an English word which means a research. So if you're talking about an analysis, it means you have to make a research on something. It could be research on a particular research on a particular currency, research on a particular information or data. So that is the meaning of analysis. At least I can tantamount to a meaning of analysis. So in trading also, before we pick a trade, we need to understand what analysis means. We need to make our own research before we pick a trade. So you making that research, it's in three types. It could be fundamental, it could be technical, it could also be sentimental. So what do I mean by fundamental? Like you can see on my screen here, this person is a newscaster, so it's news TV. So fundamental analysis involves you using what? News informations, economic informations about a country's currency, about a company's shares, about a product or commodity. So for example, if you are talking about fundamental, you are talking about the news. So if you are talking about the news, we might have people that study currencies. For example, the dollar, the US dollar, there's a news that usually comes up every first Friday of the month for US dollar. It is called the almighty non-farm payroll. So this is the unemployment rate, unemployment information about the United States of America. So how does it affect the dollar? It affects the US dollars. It affects the US dollars. How? Because a lot of people, if the news comes out positive, dollar will be strong, and if it comes out negative, dollar will be weak. So this will also affect our trading pattern. And you know that if dollar is strong, a whole lot of people we want to buy dollar. And if dollar is weak, a whole lot of people we want to sell what? We want to sell US dollars. So that is what fundamental analysis. So we will not go deeply onto fundamental analysis today, but today we are going to, sorry about that, we are going to technical analysis. So today we are going to technical, let's go to sentimental analysis. So when we are talking about sentimental analysis means you using sentiment to trade, to pick your trade. You're using sentiment to enter the market. It could be bullish sentiment, it could be bearish sentiment, but using sentiment to talk about the market. And the third one is technical analysis. Now, when we're talking about technical analysis, this is what we are going to talk about today. And for the next few days, we'll be talking deeply about technical analysis. So today we'll talk about trend. Tomorrow, on Friday, we are going to talk about support and resistance. Then next week, we will talk about candlesticks, so and so on and so forth. So as for a few weeks, or probably to the end of this year, we'll be talking deeply about technical analysis, because technical analysis is one of the most integral analysis or analytical way of trading and making profits in the global financial market. So what is technical analysis? Technical analysis is the study of price movement in a market, whereby trader makes use of historic charts, patterns, and indicators to predict future directions in the market. So what are we talking about here? We are saying that technical analysis is the study of price movement in the market. So you knowing when to buy, when to sell is you, at least we can also say that you are studying the price movement in a market. Okay. So technical analysis is the study of price movement in the market, whereby trader makes use of historic patterns. So let's check another keyword, historic chart patterns. So chart has patterns when it comes to technical analysis. So you use chart patterns. When you talk about historic means something that has happened before. So when we are talking about things that have happened in the past, then we are talking about historic chart patterns. So chart patterns, it means that chart trading market has its own pattern. It has its own way of moving. It could be bullish, it could be bearish, it could move to the upside, to the downside. These are examples of what chart patterns. Then it says, and indicators to predict future directions in the market. So we use historic patterns. We also use indicators to predict future directions in the market. So it is the graphical representation of the past, present performance of a market, which guide and inform traders about the potential future directions before entering a trade. So the second paragraph says that the graphical representation of the past, so something that has happened in the past, and you are using it to gauge your present. Okay, so to gauge your present, and also you use it to determine what is happening in the future direction before entering a trade. So trading is not just gambling. You need to know what has happened behind. You need to know what has happened in the past. You need to know what is happening presently so you can gauge it to know what is happening in the future. Like my mentor, do use these examples. He says that, for example, if you are using an ATM machine and you're using an ATM machine, if you are on the queue and you see this ATM machine today in your presence, it swallowed someone's card, and you go back tomorrow to that ATM post, that particular ATM machine, you will want to slot your card inside. You will still want to wait and allow somebody to slot his card inside to know if the ATM machine will not swallow the card. So you doing that, it means that you are using what has happened in the past to gauge what is happening presently so that you can pick a trade or know the particular direction of what is happening in the market in the future. Okay, so let's go to the next slide, which is benefits of technical analysis. So what are the benefits of technical analysis? Why do you need to trade with technical analysis? One, it helps a trader to know the future market direction easily. So as a technical analyst, you judge it from the past with cool confirmation of the past. You'll be able to know what is happening in the market in the future. So you'll be able to know the future direction of what is happening in the global financial market. Why? Because you've gotten information of what is happening in the past. Okay, so you've gotten the information of what is happening in the past. So second one says it helps a trader in finding the best entry and exit point. That is, to know where to buy and when to sell or exit by studying the past price movement on the chart. So what does it mean? It means that technical analysis helps you to know when to buy and when to sell. So when we are looking at it passionately, we look at it that, okay, when should I buy this market and when should I sell this market? And that is the problem, that is the puzzle that a whole lot of traders want to know how to solve. So with technical analysis, you have better insight about knowing when to buy and when to sell in the market. Okay, so let's talk about the other one. It says that it helps a trader to know characteristics of price movements in any market, such as trend, retracement, continuation, and reversal. So what am I talking about? I say that this helps a trader to know what is happening in the chart. So we are still going to talk about the characteristics of price movement, which is the trend, the retracement, the continuations, and the reversal. So these are important components of a price movement. So the last point is it is being used by most successful traders, both in the past and in the present, in making profitable trading decisions. So what does it mean? It means that technical analysis is being proven by traders in the past. Traders that are successful in the past, they are using it to make their decisions, and presently, there are also traders that are using technical analysis in making profitable trading decisions. Okay, so let's go to the next slide. So please, if you have any question, kindly reach out to me. Okay, so let's go to the next slide. Now, let's talk about the characteristics of the price movement. Okay, so the first thing, I am going to be sharing my whiteboard. I'm also going to be sharing a screen because this is an online class for people, for some of us that are not in Abuja, to have better understanding or better opportunity of how to trade in the global financial market. So the first one is a trend. What is a trend? A trend is a tendency for price to move in a particular direction over a period. So what does it mean? So I'll be switching from my whiteboard to my screen so we could be seeing what I mean by what a trend is. So we say a trend is a tendency for a price to move in a particular direction over a period. So when price, it tells you that price moves in a particular direction. Then the last keyword I want us to understand or to write is, or to take note, is the period. So when you say a trend is a tendency for price to move in a particular direction over a period, it means that it doesn't stay forever. So if the trend is moving in straight line, it does not stay forever. So there will be another time where the trend will move in the other direction. It can be long-term or short-term. So a trend also can be long-term or short-term. So this is complementing the first statement, which says the trend can be a long-term trend. So it can be going for weeks, can be going for months, can be going for years, or short-term. It can go for within a day, for hours, or minutes, or seconds. So trend is not, market doesn't move in a particular direction forever. Now, success with trading is largely tied to traders' ability to identify trends and position themselves for profitable trade entry and exit. So what does it mean? It means that if you want to be a successful trader, you need to understand what trend is. You need to understand what trend is. You need to understand when you are in a retracement. You need to understand when you're in a trend. So we are going to talk about all this in short in a while. Okay, so there are three types of trend. Yes, there are three types of trends. The first is an upward trend, the second is a downward trend, and the third is the sideways trend. So as you can see here, this is an upward trend first, this is a downward trend, and this is what? Sideways trend. Okay, so let's talk about this trend one after the other. So the first is an uptrend. So the first types of movement of trend is a what? Is an uptrend. So let's talk about an uptrend. Now, an uptrend is generally a price direction, or an instrument is when the direction of a price of an instrument is going upward. So it's moving up. So I am going to my whiteboard. So if you see my whiteboard, kindly leave a chat. Can we all see my whiteboard? I need to comment on the chat. Can you all see my whiteboard? Hello? So I need to comment in the chat. Can you all see my whiteboard? Okay, that's great. Somebody said yes. Okay, now let's talk about uptrend. When we are talking about types of trend, so the first is an uptrend. So price moves in an uptrend. Okay, so price moves in an uptrend. Okay, Adeyemi Bello says yes. Emeka Celestine says yes. Okay, that's good. Okay, so let's talk about price movement in an uptrend. Okay, so I am also going to be explaining it in such a way that people buy and sell. Remember, in trading, we buy and we sell. So I am going to make it in a way that we understand it in terms of buying and selling. Okay, so now the first thing that happens, let me use a graph or let me draw a box. So I am going to draw a box here. I'm coming. So let me draw a box. Okay, so let's draw this box. Okay, so this is our box. So I am going to use price movement within this box. Okay, so and after the box, let me, I am going to notify the price from here to here. Okay, okay, let me use this side. 1, 2, 3, 4. So I'm going to space it very well from here, here. Okay, so now, in this region, let me say this is, I'm going to put 50. So we have 50. Okay, so let me shift this to here, 50. Then let's say 40. Let me shift it to here. Okay, 40. Okay, I can be doing like this. 30, 20, 10, 0. Okay, so let's shift it this way. Perfect. Hold up. Okay. Okay, so let me erase this for us. Oh God. I think everything is been erased. Okay, so I'm sorry, let me redraw the box because I want us to understand what I am talking about. Okay, so I'll redraw the box because I want to help teach us what an uptrend means, what we understand by uptrend. An uptrend. So I'm going to write a number from 50, 45, 40, 35, 30, 25, 20, 15. Okay, so let's take it like that. Let's go from here. Okay, 50, 10, 10. So can you all see the numbers? So can you see the chart on my screen? Okay, so if you can see what I drew on the board, please, I need you to help me notify me so we can have a better understanding, because what I want to explain is what happens every single day, okay? Every single moment on our screen. It happens every single moment when it comes to trading. So now, uptrend. Before I forget, let me tell you something about an uptrend. Uptrend, okay, I'll say it later. So let's continue with our numbers. Just a minute. Okay. Okay. Okay, so let's start with 5, 10, 15, 20. Perfect. Okay, that's great. Now let's talk about the uptrend. Uptrend means that it is assumed that a cheap price will always become expensive. So, and when a cheap price becomes expensive, your intention is to buy low and sell high. Let me tell you something. If you don't understand what happens mostly in trading, is everybody wants to learn or wants to know when to buy low and you sell high, which means you buy at a cheaper price and sell at an expensive price. So selling in this aspect means you are taking your what? Profit. So in an uptrend, you always think of buying when the price is low. And one more thing again, price doesn't move in a straight line for a longer period of time. It doesn't move in a straight line for what? For a longer period of time. What it does is it moves up, rest, come, move again, rest, move again, and rest. So let's draw it and let's continue. So let's say this uptrend for an uptrend for a commodity. This is $5, $10 and all. And it starts from $5, or let me use Naira because we're in Nigeria, 5 Naira. And a whole lot of people buys this price at 5 Naira. Remember, I said this price start going up from what? 5 Naira. And you know, when the price is at 5 Naira, when the price is at 5 Naira, a whole lot of people that buys at 5 Naira, we want to take their profits. Am I correct? Yes, a lot of people will want to take their profit when the price is at 20 Naira. So when the price is at 20 Naira, it started from a lower price, and you know, it's on a high price. So when the price is at 20 Naira, a lot of people want to take their profit because they're like, okay, I buy this at 5 Naira and I'm taking up my profit at 20 Naira and the price is at 20 Naira. Let me quickly take my profits before price changes direction. Okay, so now when you have that, the price, as you're going up, the price will need to come down because if 100,000 people are buying at 5 Naira and 50,000 people sold off at 20 Naira, the price will do what? We come down a bit. So when we have another price, you know, sorry. Okay, so we will now have another price from here. So when people start taking their profits, you'll see price coming down. And when it comes down, it forms a low. So let's say here, this is the first price at which people buys at 5 Naira. And a lot of people are taking their profit at 20 Naira. And you see that once they're taking their profit at this 5 Naira, a whole lot of people will also want to buy again when the price is becoming cheaper. So when they buy very cheap, let's say 100,000 people buys at 5 Naira, 50,000 people take their profit at 20 Naira. The price is now within the range of 5 Naira or 10 Naira. So you see that if 100,000 people buys at 5 Naira, 200,000 people will want to buy at 10 Naira because a lot of people will notice the movement of this price, that it has gone up to form a low, a high, and it has formed another low. So the next thing we do is we will look for what? Another movement of price. So if people buy at 5 Naira and they sold at 20 Naira, and another set of people buys at 10 Naira, and the price is now at 35 Naira. You see that once the price is within the range of 35 Naira, a whole lot of people that buys at this 10 Naira, we want to take their profits. So once they take their profit, what happens again? Price comes down and goes down to about 25 Naira. And when price goes down to about 20 Naira, you will see that same scenario will happen. A whole lot of people will want to buy again. So once they buy, what happens to the price? Price goes up again. And once price goes up again, what will happen? When price goes up, it goes up to 14 Naira. And what happens? People will take their profit. Again, the price comes down to 30 Naira. And what happens again from 30 Naira region or 25 Naira region? People buys again. Are you getting my point? So people buys again. So this is what happens every time in the market during an uptrend. So what happens? We have series of what? A low, a high, a higher low, a low, a high, a low, a high. So now let's label it because we need to label it. So we know that the first place at which they buy, it's 5 naira, right? So 5 naira means what? A low. So I'm going to use L. Okay, L to signify a low. Okay, so price starts with 5 naira, which is low. We know that at 5 naira, price is lower. At 5 naira, we have a low here. So at 5 naira, we have a low here. See, we have a low at this region. So we call this a low. Okay, so since we call this a low at this region, then the next place, 20 naira, price has created another one, another high here, a high, which I will tag H. Okay, let me use H. Okay, so what happens here? Price created a low at this point, and at 20 naira, it created a what? A high. So we see that when price created a high, I remember what I told you, that people want to take their profit. So since people are taking their profit, price is going down to create another low. So if price creates another low, which is here, so which is here, price creates another low, which is here. You see that this low that price creates, which is here. So we can see that this low is higher than this low, the previous low. So once you notice that this low is higher than this previous low, then we will call this a what? A higher low. We call it a what? A higher low. So we can label it as what? Can label it as what? HL. So we have a higher low. Are we together? So we have a low. This is the first low at 5 naira. This is the higher low at 20 naira. And when we have another people that buys again, price breaks this high to form another high, which is a new high. So you know we have a high here, right? So if you know you don't understand, please let me know. If you have a question, please comment on the chat box so I will explain to you better. So price creates another high, right? So price creates another high, which is higher than this previous high. So we have a what? We have a higher high. So we have a low, a higher low, we have a what? Higher high. So when we have another high, what are we expecting for an uptrend to continue? We need another low, but the low must be higher than the previous low. So when we have that, we will now have another what? So let's say we have another low that is present than the previous low. Okay, so when we see a low that is present, that is higher than the previous low, so the present low is higher than the previous low. So we have another what? New low. So we have another new what? Another new low, which is higher than the previous low. So at this point, we have another higher low. Okay, so when we have another higher low, for you to identify an uptrend, you will need a new high. So this high, when you notice that this high is higher than this previous high, then it's telling you that the trend is continuing. Okay, so the trend is in continuation. All you need to do is what? You tag another high that is higher than the previous what? High. Okay, another high that is higher than the previous what? Previous high. So we have a new higher high. So after having a new higher high, the next you need is a what? We need a higher low. Okay, so we need a higher low. Then we also have a what? Higher high. Higher low. right? So this is how a price moves. So it moves from a lower part, which a lower price, to a higher price. Okay, so as it's moving from a higher price, from a lower price to a higher price, so as it's moving from a lower price to a higher price, people take their what? Profit. So as it's moving from a lower price to a higher price, people take their what? People take their profit. And once they take their profits, it gives room or opportunity for people that hasn't bought before to buy again. So let me explain it. We have a low here. This is the lowest price, 5 naira. Price moved down to 20 naira. People take their profit. It comes down to what? To 10 naira. So it forms a low that is higher than this previous low. So when we have a low that's higher than the previous low, then we know that the uptrend still continues. Then we have another high. So this is the movement of price when it is an uptrend. So when price is an uptrend, it is assumed that market or the price or the chart is going up in an upward direction. So it doesn't go up in a straight line like that. It makes a low, a high, it forms a higher low, forms another higher high, forms another higher low, forms another higher high, higher low, higher high, higher low, higher high, till we have a change in market direction. So this is an example of an uptrend. Now, I hope you understand what uptrend means. So this is an example of an uptrend. So let me go back to my screen. Let me go back to my slide. So I will so that we can talk better on an uptrend. So types of trend, we have an uptrend. The next trend we are talking about is a downtrend. So before I continue the downtrend, let me quickly say something. So in an uptrend, what do people do? People buy in an uptrend. So how would you trade an uptrend? What is the mindset? What is the first thing that will come to your mind? Doing an uptrend is buying. So when the price is cheap, when the price comes down, you what? You buy. Okay, so you buy, you keep buying when the price becomes cheap. So where are the areas to buy? You buy when you have a higher low, you buy when you have another higher low, you buy when you have another what? Higher low, because it's an uptrend. So that is the first thing we need to identify when trading. So the first uptrend is for buying alone. So when you see price forming a new higher high, you wait for the higher low before you think of buying. Now let's go to the other one, which is a downtrend. Now, what are we talking about when a downtrend? Downtrend means price is coming down. Remember, we talk about trading being a market or a scenario where you can buy and sell at the same time. Okay, so in trading, you have the opportunity to be a buyer and also the opportunity to be a what? To be a seller. So you can be a buyer, you can also be a what? A seller. Now let us talk about a downtrend. A downtrend means price is coming down. It means when price or market is coming down, that is moving from the high side to the low side. So when price is coming down, we have a downtrend. So downtrend is generally price direction of an instrument is downward. So when the price is coming down, so we have a downtrend. So in a downtrend scenario, it doesn't move like an uptrend. Let's go to our whiteboard. So it doesn't move like uptrend. You know, when price is going up, it's just similar to an uptrend, but it's in another direction. That is in the opposite direction of the uptrend. So when we are having series of higher lows, higher highs, higher lows, higher highs, higher lows, higher highs in an uptrend, in a downtrend is a what? We have series of what? Higher highs, higher lows, higher highs, higher lows. So you think of it like you are climbing a step. So we have the first step, second, move up. So that is how price moves in an uptrend. Okay, so let's talk about downtrend. Let's talk about downtrend. Okay, so when we say something is coming down, it means it is coming from a high side. Okay, it is coming from a high side. So when we're talking about downtrend, we are saying the price is moving from a high side to a low side. Okay, so price is moving from a higher side to a low side. Okay, so, but if it's an uptrend, it's moving from a what? From a lower side to a high side. So let's talk about trends. Now let's talk about a downtrend. Now, a downtrend, when we have downtrend, we are saying that this particular market is going down. Okay, so we have downtrend. So it means it's coming from a high side. So when, for example, when you have an asset or you are a seller and you have the opportunity and you have information that this particular product you are buying is, you can have the opportunity to sell when price is becoming cheap. You know, you'll be waiting for price to be becoming expensive so that you can sell again. You know, if you have 50, if the price is at 15 naira and you have the opportunity and you are being told that this particular commodity or the price is what is going to be cheap, that is, it's going to lose value. So what would you do? You'll be thinking of selling. So when the price is on the high side, you sell, or you wait for price. Yes, you sell. Then you wait for price to be high again before selling. So let me draw that this chart. So let's say the downtrend start from the high side, like I said. So we have the high part, which is from 15 naira, price moves down to 14 naira. You know, if you didn't sell at 15 naira, you wait for price to go up a bit. So price goes up from 14 naira again. What did you do? It comes down again to sell. So up 35 naira, 35 naira, yes. It becomes cheap again to 20 naira. Then we have price going up again to about 30 naira. What does it do? Comes down again to about 15 naira. Then price goes up again to 15 naira or 20 naira. Then comes back again to 10 naira. So this is characteristics of price in a downtrend. So characteristics of price in a what? In a downtrend. Okay, so this is the characteristics of price in a downtrend. So because it's coming from a high, what do we have? We have the first part we label is what? Is the high. So it is the opposite direction of a trend, okay, of the uptrend. So when we have a high here, we have a high, so it's coming from the highest part. Then, you know, 14 naira that people take their profit, the first take profit that people take, or price move back up again. This place, we can call it a what? A low. Okay. Okay, so we have a high, we have a low. Like I said earlier, remember the scenario of the uptrend and downtrend. Then we have the next thing we have is a lower high. Okay, so we have a low. Then we now have another high again. So when we now see that this high that was formed is lower than the previous high. So you see that this high is lower than the previous high. Then we have a what? A lower high. So after we have a lower high, we have another low. You know, this low at 30 naira is lower than the first low that was at what? 14 naira region. So when we have this low, then we now have something that is called a what? A lower low. A what? A lower low. So when we have a lower low, that means this low is lower than the previous low. Okay, so we have that this low is lower than the what? Than the previous low. So we call it a what? A lower low. After a lower low, we need to expect another one, which is a what? A lower high. So we have another high, which we notice that we have another high. So we see that this high is lower than this high. So we target the lower high. Then when we now see price making another low, which is lower than the previous low, so we have a what? Lower low. Are we getting it? Then here we call it a what? Lower high. So here we have another what? Lower low. After a lower low, we have another what? Lower high. So After a lower high, we have another lower low. Then series of what? Lower high. So you can see that there's something important, something spectacular about both of them. They both have a highs, they both have the low. So you need to know how would you identify the trend that you are in is when you identify the highs from the what? From the lows. So when you identify the highs from the lows, then you identify the trend that you are in at the market. So you identify the trend that you are in the what? In the market. Okay, so that is what we have about the downtrend. So we've talked about an uptrend, we've talked about a downtrend. Now, how do you trade this downtrend? All you need to be thinking of is when to sell. Okay, so because in an uptrend, all we should be thinking of is when to buy. But in a downtrend, all you need to be thinking of is what? Is when to sell. So once the market has formed a lower high, you'll be thinking of what? Selling. Forms a lower low, you allow it to form another lower high, you do what? You sell. When it goes down, if you wait for it to form another lower high, what do? You sell. You allow price to go down, wait for it to form another lower high, you do what? You sell. So you keep selling when price forms lower high. Okay, then in an uptrend, if you want to buy, you keep buying when price forms a new higher low. So those are the two things you need to look out for when trading the trend. Okay, so I hope you understand uptrend and downtrend. So let's go back to our screen so that we have another type of trend. We talk about another type of trend. So we have an uptrend. This is an uptrend. As you can see that the price forms a low, a high, higher low, higher high, higher low, higher high. Then in a downtrend, it forms a high, a low, a higher, lower high, lower low, and the likes. So let's talk about trends, sideways movement. Sideways movement or what? Consolidation. So when I'm talking about sideways movement or consolidation, this means that when price is what? Is not going up or not coming down. So they are both moving in a particular fixed price. It goes up to a price, it comes down to the other price, it goes up, it comes down, it does not break out. So that means the price is moving in a sideways market. So let's go back to the whiteboard and we explain sideways market. Okay, so let me rub up this. I hope you all understand this trend. So let's talk about the sideways trend. So some people call it range, some call it consolidation. And so sideways. So sideways, which can be called range or consolidation. Okay, so sideways means range or consolidation. So what does it mean? It means that price is ranging, it's moving up and down in a fixed price. So let's say this is 4 naira and this is 40 naira and this is 25 naira. So when you see price forming a high, a low, a high and a low around a price. So we have price goes up like this, like this, like this, then like this, so we have another one like this, like this. So you could see that price is ranging between 45 naira and 25 naira. When it gets to 45, it drops down to 25 naira. And when it gets to 25 naira, what does it do? It drops down to what? I mean, when it gets to 25 naira, it goes back up to 45 naira. So this is telling you that price is not going up, neither going up, nor coming down. So this is example of a range or consolidation. So that's example of a range or consolidation. So these are the two examples of, the three types of market movement. So we have the uptrend, the downtrend, the range, or what? Consolidation. Okay, so we have the uptrend, the downtrend, the range, or consolidation. So these are examples of what? Of price movement. So these are the three types of movement in a price. If it doesn't go up, it comes down, and if it doesn't come down, it's in a range. So in an uptrend, what do you do in an uptrend? You keep up buying. So when the price comes a higher low, you buy. And in a downtrend, you keep on what? Selling. So when the price is in a lower high, you think of what? Selling. And in a sideways, what do? You stay out of the market. You stay out of the market in a sideways movement. Okay. Okay, so let's go to the next slide that we have. Let me share my screen and we will go back to our slide. So these are the three types of market movement. We have the uptrend, we have the downtrend, we have the sideways movement. Okay, so let's go down to the next slide. So this is the types of trend that we see. In the trendy market, this is an uptrend. We could see that the market is ranging, that is, it doesn't break above a particular price. Then we have a breakout, the higher low, higher high, higher low. Then we have ranging, the market starts moving to the downside. It has started from the high to the low, from the lower high to the lower low. So these are examples of movement in a price market. So the next one, we talk about retracement. So now we've understand when price is moving. Now retracement is a temporary movement against the established trend. So retracement is the temporary movement against the what? Established trend. Is any temporary reversal in price within a major trend? So the word within the keyword is what? Within. So what does it mean? So let me explain retracement in an uptrend and downtrend. So let's go to our whiteboard. So let's go to our whiteboard and let's have another understanding of what retracement means. So I am going to do a retracement in an uptrend and a downtrend for us all. So retracement in an uptrend and in a downtrend. Okay, so let's go to retracement. So retracement is the temporary movement of price. So now let's talk about uptrend. So let's talk about retracement in an uptrend. You see, I said price moves up, right? Then we have down, up, down, up, down, up, down, up. Okay, so now let's talk about retracement. What trend is this? This is an uptrend. Am I correct? Yes. So where is the retracement? We said retracement is the downward movement. That is a temporary change in trend. So when we have an uptrend here, you see this place, this downward path from here. From here, let me use a red box to talk about retracement. So the retracement, where is the retracement? The retracement is inside the red box. So let's go. So where is the retracement? From this place to this place is what? Retracement. Where is the retracement? From here to here is the what? Retracement. Where is the retracement? From here to here is the what? Retracement. Where is the retracement? From here to here is the what? Is the retracement. So why do we call it a retracement? Because it is the opposite direction. It is the opposite, it moves in the opposite direction temporarily in the what? In the chart. So let me change it back to green so we can understand what retracement is. So this is a retracement. This movement, retracement, we have these two as well. Okay, let me draw it up. Okay. These are called what? They are called retracement. They are called retracement. So we have price here, up like this, like this. So the red box is called the what? Retracement. Okay, it's called the what? Retracement. So they are called the what? Retracement. So when trend is going up, that short movement, that short downward push that you're seeing before the trend continues is called a what? A retracement. So every downward movement in an uptrend is called a retracement. So what does it do? The retracement is telling you that there are some people, retracement occurs, probably some people taking out their profit, or some people getting out of the market, or the market wants to retrace itself. So once you have an uptrend, retracement, uptrend, retracement, uptrend, retracement, uptrend, retracement. So in this uptrend, what are we expecting? We should expect a what? A retracement. So in this type of uptrend, we expect a what? Retracement. So that is what retracement means. It's a temporary movement of price, temporary change. You see that it's temporary. From here to here is what? Temporary. From here to here is what? Temporary. So that is what retracement means. So this is retracement in an uptrend. So let me quickly draw a retracement in a downtrend. So in a downtrend, we have something like this. Okay, so something like this. In a downtrend, we have something like this. Up, down, up, down, up, down. Okay, so this is a retracement. So where is the retracement? Let me use the red box to mark retracement here. So this is a what? Is a retracement. This is a retracement. This is a what? Retracement. So these are examples of what? Retracement. So you see that in a downtrend, so let me quickly write this. Retracement in a downtrend. So retracement. So these are example of what? Retracement in a downtrend. So the red box is retracement. So we have on downtrend, this upward movement is not yet a change in trend. It is a retracement. So retracement also gives you an opportunity to sell or buy again. So in a downtrend, once you have a retracement, this is telling you that look for another area to sell. Look for another area to sell. Look for another area to sell. And in a retracement, you have again an uptrend. If it's retracement in an uptrend, this upward. So when you see a downward movement within this upward, so from here to here, this is the retracement. So the red box are the retracement. So that is what retracement means. Okay, so that is what retracement means. So let's go to the next one, which is continuation. So when we have a retracement, after a retracement comes what? Continuation. Let's talk about continuation. Continuation's pattern shows a tendency for the trend to continue in the same direction after a what? After a retracement. So when we have a trend, after the trend has retraced, you see that continuations occur. So you can see that this, the chart on the screen, we have a downtrend, consolidation, then continuation to the downside. So it presents favorable entries to enter trade in the direction of prevailing trend. So what does it mean? It tells you that after you notice that a retracement has ended, the next thing is what? You will enter a continuation of the trend. So what is the continuation? So this area, this is what? Continuations. Okay, let me change it to. Please, if you have any questions, kindly ask on the chat box. Okay, so this is the continuations. This is the continuation. This is the continuation. This is the continuation. So when we have this, this means these are the what? Continuations. So after the uptrend, retracement, uptrend, so we have the what? This is the continuation. So, okay, let me use a straight line. Sorry, let me use a straight line. So after a retracement has occurred, the next thing we expect is a what? Is a continuation. So after a retracement has occurred, the next thing we expect is a continuation. So we have this, we have this, we have this, we have this. Okay, so these are examples of what? Continuation. So these are examples of what? Continuation. So after a trend, so we have what? Continuations. So after a trend, retracement, we have continuations. After retracement, we have continuation. So with this, I hope you understand what the difference between a trend, retracement, and the what? Continuations. Okay, let's continue. And today, the last one for today, we talk about, after continuations, we talk about reversals. Okay, so I hope you understand what a trend means. So after continuations, so a reversal. What is a reversal? A reversal is a major change in price direction of any instrument. So a reversal can occur either to the upside or to the downside following an uptrend. Okay, so on to the upside or to the downside. So what does it mean? It tells you that if a price wants to change completely, then we expect what? We expect a reversal. So a reversal happens if it's an uptrend. Reversal means price wants to change to a what? To a downtrend. And if it's a downtrend, reversal means price wants to change to a uptrend. So following an uptrend, a reversal will be to the downside. And following a downtrend, a reversal to be to the what? To the upside. So that is what we are talking about. That if it's an uptrend, price will change down to the downside. And if it's a downtrend, price will change down to the uptrend. So this is an example of what we say. And please, retracement is not reversal. Okay, maybe on our next class, the next class, we will talk heavily or better about reversal. Okay, so retracement is not reversal. Retracement is different from what? From reversal. Okay, so reversal is a total change in price, total change in price direction. So if the price is going up like this, you notice that this price, as you can see, this is an uptrend. What did it change? You see that price comes here and change in a downtrend. So the price is going up from here to here, and you notice that the price started coming down. Maybe this higher low was broken and it now forms a new lower low. Some of you to see an higher low here, a higher low, you see a new lower low that was broken. So this and this, so definitely it's time to tell you that trend has what? Changed completely. The trend has what? Changed completely. So when we have this kind of movement, then we know that it is a what? Total reversal. Okay, so that is the end of today's class. Next class, we will talk about more on reversal and support and resistance. Please, if you have any question, kindly leave it on the chat box, or you ask on our YouTube page. This page, these videos, we have enough videos on our YouTube. So these videos are going to be uploaded on our YouTube page, Pacific Union Africa, Pacific Union Nigeria, sorry. So our YouTube page, then the link is going to be shared to the group. Please, if you have any questions, kindly reach out to us. You can watch this video over and over again. Thank you for your time and have a nice day. So the next class, we're going to talk about support and resistance, and I'm also going to brief us a little about reversal. Thank you very much and have a nice day. Yes, Kinkley said, should you say yes? For our levels at this moment, we need to stay out of the sideways movement. Yes, because the price is not going up, it's not going down. Me, I do liken trading to driving. So when you're in a road and you're seeing go slow, or you're seeing a traffic jam, and you notice that at this point, there is always a traffic jam, and you need to move, or you are going to somewhere, and you know that at this area, there's always a traffic jam at this area. What would you do? You will what? You will avoid that area, you avoid that route and go to another route. So that is what it means when the price is ranging or doing a sideways trend. You stay out of the market for you to find a new high or a new low. Okay, so any other questions? I'll be leaving the chat for 2 minutes for people to ask their questions. And in absence of any questions, thank you very much for your time. Okay, another question. Okay, no questions. Thank you very much. Have a nice day and bye-bye. Our next class is for support and resistance. Thank you.